Good morning, this is Robin Bieber on Chart Talk on the 30th of April at 7 o'clock in the morning London time. The chart in front of us is June WTI. RBOB gave an early warning signal in the last 48 hours by moving over some of its short-term moving averages that a correction higher was probably in store for us. Yesterday, all contracts, with the exception of gas oil, but that's done it now, moved over the 5 and 8s, closed over the 5 and 8s, thereby creating the opportunity for the market to correct higher to the 13-day moving averages. This is exactly what is happening now. RBOB, in the meanwhile, must not close below 77.98, and it has huge resistance in its target zone to 82.72. More of that in a minute. But what we're seeing, and you can see it on June WTI, is the close over the 5 and 8s, which gives it the next leg to the correction higher to the 13-day moving average, around 18.52. Now, this completes a price cycle or a slingshot move, whichever you like to call it, and whilst below the 13-day, the downtrend is intact. If we move and close over the 13-day on all contracts, we are taking out the last vestiges of the resistance in a downtrend, and we're in a potential change of direction for a downtrend, which often leads to very volatile conditions. So watch out. The key resistance around 1850 is the 13-day moving average. We're completing a slingshot move higher. We've got a nice positive stochastic, which has bullishly diverged a bit, as has Brent's stochastic, bullishly diverging through the 5 and 8s now and heading to the 13-day at around 26.95 and the old 2016 low at 27.10. So this is a big resistance for it, and only a move and close over the 13-day around 26.94 would change the direction and give this correction more credence and probably taking it higher up to just south of $30. Heating on is exactly the same. Punching above the 5 and 8s, the close over last night, giving it a good chance of a run up to around 83.77, which is the 83.80 area, the 13-day moving average. This is the logical extent of the move over the 5 and 8s and no more. The 13s across the board cap the market as far as upside potential unless they're moved and closed below. They are key resistance. I can't stress it enough. Now, RBOB had already begun to move over its short-term moving averages, and then, having moved over them, ran higher to 77.98, where it faltered yesterday. If it stays over 77.98, it has a target higher to 82.72, the hazardous top of the range resistance. It's likely that if it gets the legs to run up to 82.72 and to that resistance there, that people will use, or traders will use that level as a trigger to start easing out the length on the other contracts. So 82.72 is one of the most important, is the most important resistance on the board, closely followed by the rest of their 13s. So watch it very, very carefully. A move back below 77.98 would point to this whole correction higher being faltering, and therefore it would become very dangerous if it's back below 77.98. Watch that very carefully. 77.98 support, 82.72 resistance are the two most important levels on the board today. They need watching, along with the 13s on the rest. Now, gas oil has now moved over its 5 and 8s, and whilst above the 8 has a fighting chance of hitting 232.50 area, the 13-day moving average. Were it to move and close over there, then expect more strength up towards 256 area. A nice positive stochastic. Now, if we look at some of the back end structure, deck red, deck on TI, nice and strong over the 5 and 8s and the overnight move. It should make its way to minus 460, but its 60-minute chart is showing it to be a little bit toppy, so be careful. But whilst over minus 545, it should make its way to the 13-day in the next day or two. But that 13-day will be lower, obviously, tomorrow. And on deck red, deck Brent, again, similar pattern over the 5 and 8s. Positive and bullishly diverging stochastic, should make its way to minus 501 area, but might take more than 1 day to do it, but it must stay over the 8-day moving average at minus 576. Again, the 60-minute chart for this spread is suggesting that it needs to shed some value first before running higher again. It's a bit toppy, and I wouldn't be at all surprised to see it slide back. Interestingly, the 60-minute chart on Brent is exactly the same position. Too much, too soon. Don't be surprised by a correction lower this morning. When I say a correction lower, I mean shedding some of the overnight gains that seems most likely. And RBOB 60-minute chart, exactly the same. So look for some of the overnight gains to be lost as the market cools down a bit. But whilst it stays over the 5 and 8 day moving averages, and the contract should head for the 13-day moving average to complete a price cycle or a correction higher. The 13s are critical. If they don't move and if the contracts don't move and close over them, the downtrend is still in force, and all we've witnessed is a strong wrong footing correction higher. And just a reminder, watch RBOB for guidance at 77.98 support and 82.72 resistance, key levels. That's all for today, folks. Good luck, good trading, and bon appetit.